All righty. Doc here from North America. Good morning, good afternoon, and good evening. Happy the hump day. Another fun-filled day. Let's see what's going on here. What a wild and crazy, I guess it's a metals market last night. That was wild. I mean, they smash a doodle silver down into the 23s. Wow. Is there like no liquidity anymore? I swear. I mean, how do you go from like 29 to 23 in like 3 days? I mean, wow. The key word there is wow. And then now I think it's up around 26, heading for 27 again. We'll tune into that real quick. Let me get up onto the chat line so I can see if I can hear myself and see our trading friends this morning. There it is. Aless. Hey, how you doing? May I ask you a PhD or a medical doctor? How about I'm a quack? Whack, 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 whack. I'm a quack. It was an old nickname I was given on the trading floors. And I guess it was like 1983, 84. I was running a trading desk. I was just getting onto a seat, but I was just running a trading desk. I had a trading desk with about 5, 6 clerks on it. And maybe I was on a seat. I don't remember now exactly. I think must have been on a seat. I was on a seat. And so what happened was that the Dow Jones had done something. And a lot of people started to come to me on the trading floor that I was on at that time. And they used to ask me about the technical markets. And I guess I was starting to get a reputation of understanding the stock indices and so forth. Remember, there were just barely any stock index futures. I think the value line out of Kansas City, and they were starting the S&P 500. So I was following the Dow Jones Industrial Average, which was the XMI on the Amex, and the market had made a move, and I said, people were really stunned by the move in the market on the Dow Jones, and I said, this could go on for 7 days. And they were like, how can you even tell if something like that will go on for 7 days? I said, the math is really aiming in that direction. Like, this could go on. This could be a leg up. And so I guess it was like the 5th day or 6th day, something like that. I don't know, maybe the 7th day. And I came onto the trading floor right before the bell, and someone goes, yo, Doc. And I'm just walking. I just keep on walking. And I said, yeah, what's up? And I was like, why Doc? He goes, you're the doctor of the Dow. You know the Dow Jones Industrial Average better than anybody we've ever seen down here. I said, okay. And so they would just, after a while, it just became a nickname. They just all started calling me the Doc, DocDow. And so that's how I am, DocDow. Now, I did physics and mathematics and cybernetics, and I was pre-med first before I went into that. Because I did all pre-med, and I was going to be a doctor, and then I got the physics. I had to do biophysics 1 and 2, and when I did the biophysics 1, taught by the head of the physics department, like 3 days into the class, he was like, "Oh, you got to be a physics major. You got your mind is for this stuff." And I was like, "Oh, okay." Like, I was kind of skeptical, and so. My background is physics and mathematics and human physiology and chemistry and so forth. And then I went to the trading floors. They legalized options in the late 70s, and I went on to the trading floor. I applied for a job at the Amex in late 78 going into 79. And they had created the options exchange about a year ago before that. And so that's how I ended up on the financial side, but I still do my physics, do a lot of physics, so forth and so on. So anyway, that's it. There you go. There's the answer to that one. See that? I try to answer all questions. Spent 5 years up in Princeton doing string theory and so forth, and a lot of other stuff. Just recently in the last decade. So that was pretty cool. Anyway, what do we got going on here? So let's go back to the metals, unless there's another question out there somewhere. And like I said, I'm dangerous when it comes to answering questions. Bitcoin basically, let's take a look at the, we'll see the euro. There's the euro. Let's take a look at the euro just really quick, because this is a currency webinar. So we'll just take a quick look at the euro, and then let's run over to the metals. But I want to see those metals. They're wild. Okay, so you can see here on our work, it's trying to bounce back up. J4X, we'll see here in a few seconds. It's loading up now. There we go. It's not bouncing up yet, but I'm sure it will be. All of them are doing the red thing. You can see that there, and you can see the red thing on ours too. So, all right, now let's jump over to the metals, because that metals. Don Henry, yo Don, how you doing? Welcome to the hood. Welcome to our neighborhood. Okay, let's check it out. We're perplexed and excited about the way the where is it at? Where is it? Not there. I don't need that. We don't need soybeans. We want silver and gold. So let's close that. We're really totally fascinated by that action in the metals market. It was a real good action there. And then it was down into the 70s last night. Gold, I guess it was 1970 or 1870 something. It was like, wow, how much? There's not much more room on the downside there in that short period of time. So they bounced that back pretty well. Now here's gold there, and you can see that right there, and you can see the bounce that they gave it back. And we'll take a look at it on J4X too. Look at that. Move that over a little bit if we can. Let's move that over. There we are. Look at that bounce from the 67. No, where's the low? Now that says the low is 74.20. Let's take a look. Check it out on J4X there. What a wild and crazy market. I love it. Because our math picks up on all this stuff, so we have no real problems here. Oh, you're down under. So it's like, what is it like? Is it midnight down there or something? Is it after midnight? You're up late, aren't you? Here and down under. Whomever you are, free, do you think AUD is in reversal? What did AUD do? I saw, look on our fact check sheet. AUD is in a daily sell now? But it's got 2 days in a daily sell, but 17 weeks still in a buy. Let's take a quick look at it. There's the gold. You can see the same thing there with that push down in the gold right there. And our work, we went into the daily sell up here at the top. So this was not much of a surprise. I guess there was a mild panic to it. I guess that's what it really came down to. So whoever was short out there, I think I heard from somebody last night. I was half asleep. But I heard from somebody on from the webinar here that they were trading, they were following our work, and they were short the product and sound like they did really well. So that's pretty cool. Let's see, where are we at here? Let's take a look quickly at the euro. No, sorry, the Aussie. Let's take a look at the Aussie right there. And as you can see here, it's trying to bounce up. And you can see the weekly is really strong, and you can see our time, the white line is above the time manifold. So there's not a lot of selling really going on there. So who asked for that? That was LS, was it? Yeah, maybe not. Who asked for that? Aussie. Who was I answering? Oh, it was Alice Ellis. Okay, yeah, so I don't know about a reversal in what way? Like go back up again after 2 days down? Yeah, I could see that happening. It turns back up. You can see it there. It's trying. Let's see what it shows on J4X. Is that what you mean by a reversal? I don't think it would be that hard for it to do that, especially with us being in a weekly buy. The daily buy could come around the corner. We'll see how that goes there. MHB, how you doing? Malburn. Oh man, I like that TV show on ABC, Rake. I enjoy a lot of Australian stuff, but Rake cracked me up. I mean, Rake, what, and not only with all that physics and math background I have and medicine, but I've been involved in politics too. I was like chairman of the Republican Party, and all kinds of things like that. I mean, I've been deeply involved in politics and congressional elections and candidates galore. So I could really relate to what's his name? Something Green, Clifford Green. How he accidentally ends up in as a senator. That that makes total sense to me. I love it. All right. Let me see if I'm answering all the questions now. Let's see. Hello, Doc. I'm starting in this market. How nice to be able to count on your experience. Well, Marcos, I'm really glad. That's why we do the webinar. That's literally like a third of the reason I do the webinar is I got all this knowledge and I have no problem sharing it. It's easy peasy. If I don't know an answer, I can probably figure out where to find the answer. There's almost no question I can't answer. So, been a member of every major exchange in the United States. Matter of fact, Australia kept on trying to offer me. First, they offered me one free exchange seat back in the old days. Then they offered me 2 exchange seats. And then they actually one time emailed me and said, we'll give you 3 if you start an operation here for free. So they weren't that expensive to begin with, but, 3 free seats could have been interesting. So, so Don, I'm into rake. He cracks me up. All right, now let's see. MHB, what's cooking? Anything? And let's see, what else can we talk about around here? So anyway, should we go back to the metals? And when it comes to that Aussie, wouldn't surprise me if the Aussie tried to reverse itself in the daily and get going up again. That would not surprise me. Let's just check out silver here. Silver was just blow my mind. Silver when I saw it touching the 23s. It's like, what is up with these people? What who throws it out the door like that? That's so weird. All right, let's go find Silverado. Silverado. I'm the singing trader. Yeah, see that? Look at that there. They took it down to 23.58. I mean, honestly, 3 days ago it was trading at 29. I mean, how does this thing get a 33% haircut in equity in a 3-day period? 33% equity cut. I mean, haircut. Wow, Gold, I sell it again at 1945. What is your view? Let's see. Let's see what's going on. You know how I am. I follow the math. So let's see what the math is saying. One thing was pretty clear, even without the math turning too much at all last night. When it was down, when it was in the 60s, it was in the 70s and the 80s. It was pretty clear. That fast a drop, almost 200 points. You gotta close your shorts out and take the money and run. I mean that's like just natural DNA. Understanding that one, something's down a couple hundred points in a few days, and you're short it, and you're raking dollars in, you're making money. No pun there on the Clifford Green there on the raking it in, and you got to take the money. You just gotta and sit back and laugh and watch, but don't trade again for a while. Hold on to the money. 45, yeah, that's where we are now. We're up into the 45s now, so. I mean, they got that gap thing here. You know how the gap people get pretty excited about that, about filling the gap. So there's going to be some pressure between 2 days ago's high, I guess it is, or yesterday's high. That high of 1967, and today's high now is 56. So, there's going to be that group of people who chase after the gaps. So there's going to be a little pressure on the upside continuously, I think, throughout the day. I don't think they're going to, when it comes to shorting it at 1945, I don't see any particular reason to do that at the moment. I mean, we're in a sell and a weekly buy. So that I'm not going to say, yeah, go short it. Our math was saying basically take the profits now, don't be long, up 150 points ago. So, that's more where my head is at. You know what I mean, MHB? You know how I am. I try to follow the math all the time as best as I can, and that's what that's showing us right here. Let's see if I can find the mouse. There's the mouse. Yeah, I mean, we're in weekly buys, so I mean, this has just been a nice gift for anybody who tried shorting it instead of just taking the profits. Either way, you got all that from the buy here up as a win. So, I could see, I mean, now buying puts or something like that would have been fun. I wasn't involved in this particular move at all. I was just doing other stuff. I mean, we stopped, the long, and that was it. Keep the money and run. I didn't really think about it too hard. I saw yesterday when they were smacking it, I figured they'd smack more and shake them up a little bit, and that's what they did last night. So, but trying to short it here, in a weekly buy, nothing. That doesn't float my boat. You know what I mean? All right, where are we at now? So, what's the next thing? And you can still ask me more questions about the gold if you want. There's no problem. But this way, at least you know where I stand, and that is it's in a weekly buy and a daily sell, and it's trying to fill some gap possibly. It means basically keep the money that you've made and just sit back and enjoy it. Wait for the next. I was saying to someone last night, like I said, I was half asleep, and I was doing some chart work, and I dozed off. And the next thing I know, my right side computer dings, and someone is texting me. So it woke me up, and I was looking. And I was getting ready to go to sleep, and then I got into the conversation, and then I went and looked at gold and silver because they were in gold and silver, and they were smacking the daylights out of it. And I was like, well, just take the money and run. Let's see. What am I thinking about now? I'm lost. I was going after something. I guess I was just showing you the weekly there. So let's see. Let's go on to cable. I guess we're gonna take a look at it. See what the cable's doing, and we did take a quick look at the euro. Euro was kind of aiming its way back up again. Let's see what the cable's doing. There it is. There 130s, 35 or 36, and let's see what it does over here. No, let's try that one right there. GBP, yeah, look at that. Okay, so it's been doing sideways stuff, but look at it, it's trying to lift. You can see here on the J4X, we are pressed through both lines, looking for that little turn thing going on like that, especially with the red. So, and then you can see here our work is starting to try to turn up. Not plus yet. It's in a weekly buy, and look at that time manifold right here. That's the two mirrored image lines. They are pretty firm there, and you can see the white line's not even remotely piercing it. So you can see here it's holding up, and this white line is refusing to even make a move. So through it, a little pressure on the downside would show us that we're at least getting some selling here. Right now they haven't done a lot. I mean, we are getting the selling. We are in the sell. But I mean, it doesn't seem like there's a lot of conviction to that selling, Don, what happened? The YouTube police grab you? What'd you do? Say something positive like, I don't know. You never know with the YouTube police. One thing they don't like is they don't like you putting web addresses up there. You have to cut out the http.www. And you can't put the .com at the end of it. So try doing it again, only doing it that way. I mean, you might have even, who knows what else that they don't like. It's the YouTube police, so you never know. All right, so there's the cable. Cable's acting pretty well there. Let's take a look at Turkish lira. It actually went into a daily sell there yesterday. Right there. How about that, huh? It's bouncing back up already. Boy, I said that a couple of days ago. If this thing would close into a daily sell, and what was I thinking at the time? I don't remember exactly, but I said something like maybe they get a shot to go after the weekly. But look at that, the time manifold so high up compared to the line, the white line to the time manifold. See it down here, the purple, the dark blue on there. So. This thing is trying to bounce again. You got a volatility situation going on at the moment with the red and a green dot on the same bar, which is no surprise with this product. Now, okay, there we go. Now we're just a green dot, and you can see it's trying to lift itself back in again. So, there's not a lot of selling going on there. So, good luck with whatever that is, Don. Just like I said, cut out the yeah, HTTP, and cut out the www, and they'll let you post something like that. And if you're trying to do a video, who knows what they'll do with that? They might get nuts. All right, let's take a look at Canadian. Canadian seems to be breaking away from the Turkish lira more and more each day. We've watched for months upon months how they march together, and now it just seems like it's breaking up. Now, we went into the daily sell there yesterday. I didn't put the line in. Not on this one, at least. And then, so there it is there. It's in the daily sell yesterday. And, it's still moving down a little bit in here. You can see been in a weekly sell since back here. So there's not a lot of, real buying going on there. It goes into a buy, it lasts for a day or two, and then it rolls over again. That's a bullish sign, obviously. I mean, when the Canadian is going down in value against the dollar, it means it's picking up value. So that's a good thing. I don't know what interpretation is going on now. I just know that they got that "we" thing going on with the Prime Minister, but it seems like there's still investigations going on. I saw, but I don't exactly see what that does to the Prime Minister. I mean, he's already has a minority. He's the Prime Minister, and he has a minority government at the same time. So, anything is pretty much possible with that whole situation up there. All right, let's take a look at Swiss. Unless anybody wants to see anything else, we're just going to keep on rolling through our old list here that we usually do. So, we'll just keep on doing our thing here. Let's see. Let's see how the Swiss looks. There it is, right there. I think we were in a buy, right? Yeah, buy for a couple of days. There it is on J4X. And you can see on the spreadsheet, that's line 21, 2 days in a daily buy, but we're 11 weeks in a weekly sell. So, the most you could have done out of that whole thing is just cover your little short and so forth. May I ask, you may ask anything you want. How much is the average expectable ROI in percent annually? Rate of ROI. Rate of, I don't know what the I stands for. Let's see, annually. And how much is the highest possible return annually realistically possible in percentage? Okay, so may I ask, how much is the average expectable ROI? Return on investment. Well, it depends on what you're doing. If you're using options and the currencies together, you can have a couple 100% return. It depends. It depends on what you're doing. If you're, just scalping, you can have a decent return there too. I guess it all comes down to the individual trader, really. Are you asking about my math in particular? Is that what it is you're asking for? The rate of return on our math? I always say that we have an 8.5 out of 10 success rate. And so it all comes down to how you use it. If you're scalping intraday, if you're building positions with options, are you doing conservative buy rights? There's no dividend in the currency. And you got to imagine a lot of it's discounted on some level solely because of the zero interest rate going on. So, there's a lot of different trading strategies that can be incorporated with our math. You can, use it to hedge if you're an importer or exporter. It'll gain you money. It'll let's put it this way. It'll keep you more right than wrong, that's for sure. Now, how you invest on that's, comes down to the individual and there's the threshold of pain and so forth. Just an average trader expectation by any strategy. Well, it all comes down to your threshold of pain and how much work you're willing to do. Like if you're trading every day and you've got a straddle on and you're trading the straddle and trying to trade the volatility and you're moving your deltas around every day trying to compensate for the decay and so forth. It's a very hard description. I can give you this. The the best I can say is that when you follow, if you go back and look at all the webinars and our charts and our, fact check exchange sheet, Excel spreadsheet, we have a success rate of about 8 out of 10, 8.5 out of 10. I think that's about the best way to describe it. Now, I cannot speculate on how you trade. I don't know how you trade, so I don't know how to answer your question on that. I can tell you what I have done in the past. I've had years where I do a couple 100%. I have years where I do little. It depends on what I'm doing. That's what it really comes down to, how much time I'm putting into it. What is your portfolio strategy between Forex, stocks, and commodities or any other asset? Basically, trading a straddle in volatile times is usually the best. And what defines a straddle is it can be sophisticated. In other words, you can be short the underlying product and long calls, call spreads, combinations. You can be long some puts, using premium from it. It's a constant adjustment of the deltas themselves. It's a little more sophisticated than most people can deal with. But overall, I've traded in many different directions in many different ways with many different quantities of assets. So when you say, Don, what is your portfolio strategy between Forex or stock? Do I trade them against each other? Nah, I don't. I think I said this in the webinar. What's today? Wednesday. I said this on Monday, I think, or Friday of last week. The only real hedge in trading is the options. So you're trading the options on the underlying asset. Anything else is a speculative strategy. So in other words, if you're selling Swiss francs against dollars, and then you go and you buy euros against dollars, trying to pair trade it in some way in a three-way structure, it's not a guaranteed hedge. Options are a guaranteed hedge. They're 100% guaranteed to hedge your underlying product. There's going to be a correlation. You have of course you have your deltas and your gamma or your theta decay and so forth, but they are a 100% correlated event. In other words, if Swiss francs go down 300 pips and you have a hedge on, chances are you're going to make 300 pips, if not more or less. Okay, but if you hedge it with, say, euros, you're not guaranteed that you're going to make 300 pips on the euros just because you hedged it with you hedged with euros against Swiss francs against the dollar. You just don't know what could occur. A lot of times they move a lot alike, but they not always do that. How about the time Swiss francs, they chose not to support the Swiss franc against the euro anymore. One day we woke up and the Swiss franc was something like 800 or 900 pips down. Now, you're hedging with euros, you get your head handed to you. You're hedging with options, and who knows, you might actually make money on that day. So, see what I'm saying there? So, let's see, where am I at? Let's see, so, hey, what was that? Andreas Elftheradas. Huh. Short euro? Right now? No, I think we're long at it. Take a look at our spreadsheet on line 14. See it right there? I'm going to emphasize it right there with a few boxes. See it? Number 12? Number 14, I'm sorry. See it right there? 12 weeks in a weekly buy. See it right there? Weekly buy. It says weekly buy there. And let's see. It's in a daily sell. So let's go back to that. So in the daily sell, let's put it up on J4X first. Right there. And I'll go slow about this because, I can, to me, options are like easy, because I've been doing them for almost 40 years. So I can slow it down in the conversation about what an option is and we can and we can kick ideas around about understanding what an option is and how they work. We've done this before. We get points in this webinar where people, and let me show you where my Chicago Quant, my research does it with the euro. But we get the points in this webinar every so often where a lot of people start to ask a question and they go like, what about those options? How do they work? And we have conversations about it. And I do a really good job of explaining them. They're very simple, but the problem is that the names. Matter of fact, I usually get pretty belligerent about the names of the strategy, the names of it all. In other words, strike price. Really, strike price? I mean, it sounds like a video game for some military thing. Strike price? Now remember, this is where I start to get belligerent. The options were created at the Chicago Board of Trade in the cloak room where they hang their jackets up and smoke cigarettes, and they would drink in there too. Okay, so they created the options exchange in the break area. All right, and they were drunked up doing goofy things. I mean, there's some S&M type stuff for the name of some of the things like straps, straddles, strangles, and so forth. I mean, God knows what day they were thinking about when they start calling them those things. And what's really weird is the Board of Trade is a futures exchange, and they created an equity exchange of trading options, which became the number one biggest equity exchange in the world. So, wow, what a crazy thing occurred there. Now, they called them calls and puts. I mean, I guess it would have been better if they would have called them buys and sells, because at least it would have been more descriptive. Because a call is an option that goes up in value when a product is going up in value. And a put is an option that goes down in value when a product is going up. Okay? Just like the call. The call goes up. The call makes money when a product goes up, and the put loses money. And vice versa. If the product is going minus, going down for the day, the put makes money and the call loses money. But why did they call them calls and puts? I know why they said what they did is they labeled it as call things away and put to. So you would be putting it to people or calling it away from people. That's why they call them calls and puts. But I don't think it's a very descriptive way of describing things. I think it's a very very convoluted. I mean, people. I think at that point people start to walk away from the conversation. They're like, oh, what the hell is he mumbling about? Calls and puts. And then the word strike price and then premium. It's like, oh my God, you're scaring people to death. I mean, you're just driving them out the door. They don't want to look at options because what the hell is a strike price? Does that mean I get beaten in the head over something or what? And then trading strategies, straps, strangles, and strips and spreads. I mean, they get into these S&M conversations. It's like, what the hell are they talking about? A lot of crazy stuff there, So I can break it down easier, make it simpler, but it does scare people away because, I mean, people don't want to think about it, and the names are not very conducive for describing themselves. I mean, they probably thought they were, but they were drunk to begin with when they came up with these names. So they said, oh, we're going to label it as a call, and the put is going to be labeled as a put. And it's like, okay, wouldn't it have been better of labeling them as a long and a short? Everybody would have been like, oh, I know what that is. It would have been like, oh, they have options, and they have long options and short options. That would have been a lot easier. And then you could have described the calling away and the putting to and all that other stuff. But instead, they invented names that tried to chase everybody away. So let's see. Am I answering all the questions out there? So you see that, Andreas? Why we're not saying about being short more than the idea that it's going down for the last couple of days, and that is we are in a weekly. Did I finish off that? No, I didn't. So there we are. We can see here we've been in a weekly buy since this point here. That's what the spreadsheet is showing you. 12 weeks now. We're on the 13th week with the weekly indicator here, and then the daily indicator. Went into a sell there on Friday or something like that, or last week or Thursday or something like that. And yeah, Friday, and so it hasn't really done much since it went into the sell. It's just kind of stumbling around, you know. Let's see, what do we got here? We got a message there. What message is that? I got a message in a bottle. So let's see, what is that? Okay, there we go. So that's the conversation there. But like I said, we've done days upon days. We'll do webinars sometimes where we'll do a half hour a day out of the whole hour of options, and we'll physically show you what they are, and explain the long option versus the short option, and or the long option versus the sell option, or I don't know, it's something like that. I mean, we can change the name, and then you feel more comfortable. Like, oh, I know what a long is, and I know what a short is, but do you really know what a call is versus a put? That kind of freak you all out. How many contracts do you open per trade with what your leverage? God knows. Depends on how much capital I'm using. It's I mean, I've done trade. I used to trade 100,000 lots. So, I mean, anything's possible. I trade one lots, 100,000 lots. I do it all. I'm been around 40 years. I'm pretty experienced out of the whole thing. So, it all comes down to the individual more than me. You see what I'm saying, Don? It's the questions are good. It's just that it's not really, there's no one size does not fit all. That's what the answer is. What has been my individual everyday trade? Probably on the biggest average trade for me as a buy side hedge fund was 100,000 at a clip, not in a day, but like in a trade. You know, trading 300,000 or 400,000 shares of stock in a day as a trade. Not more than that. Under in that area. Option wise, thousands of options in a trade. I won a trade. I can do it all. It all depends on how much capital I'm using and what I'm doing it for. All right. I hope that answers your question. Now, if you do this, if you go, okay, I trade with $30,000. Let's say you can even be 30,000 Australian dollars. If you give me a number that you're looking at, then I can give you a good general idea what the logical conservative strategy should be. I can give you an opinion on that. And it depends again. If you're trading options with an underlying product, you can trade 5 times bigger very easily. You can build positions with options enormously bigger than you can naked trades. In other words, being long or short. Because options will what they do is they harness an asset because they are guaranteed 100% to hedge the asset. So in other words, if you're hedging, Australian dollar against the dollar, and you have options on in it, you can have like a position 5 or 6 or 7 times bigger than if you're just nakedly long or short, solely because your hedge can reduce your risk. 30,000 K in Aussie, yeah. So let's see, the Aussie's in the 70s now, right? Where is the Aussie now? Let's take a look at that. I know I did look at it before, but I don't really look at the numbers the same way as a lot of people do. I look at the indicators more. I honestly couldn't tell you if it's at 72 or. Right, I think it's in the 70s though. I think Aussie dollar is. Yeah, there it is, 71.56. I was in the back of my head. I was thinking it was 77 or 78, but yeah. So you're talking about $25,000 worth of no, maybe a little less. Like $22,000 in American dollars. So, if you're trying, you could do bull spreads and bear spreads, and you can sell sell them and you can buy them. In other words, a bull spread is like you're betting that the product is going up in value. Okay, if you buy it, you can sell a bull spread, and you're hoping that the decay and the rate of change works in your favor, and so it goes away. Not a lot of money. To me, I always hate it when people walk around saying, "Oh, you only make money when you sell options." It's like, no, the biggest money I know being made in options is being buyers, not sellers, because they always get their heart ripped out, the shorts, somehow or another. They always do something stupid. They make a bunch of money, and then before you know it, somewhere down the road, they end up staying short, and they get their heads handed to them. Now, you can sell spreads naked, not naked, short, but again, a lot of times that happens. Just look at the volatility traders. They were selling the daylights out of option premium, and like 3 out of the 5 major funds now are bankrupt. They made billions of dollars. Now they're bankrupt. So, basically trading in spreads is the safest way to go. And buying spreads more of the time than selling them is basically the safest way to go. And you can set up different little strategies that will act like a short, but are not a short per se, and don't carry the same risk. Because the one thing you don't want to do is, I remember, I was somewhere. Where the hell was I? Oh, someone was telling me that they were selling. I don't know. Someone was looking at my mathematics system that we rent out, and that's what we do at the Chicago Quant. We rent our system out, and someone said to me that they sell call options or something like that for $1, or put options for $1. And I said to them, how much can you make if you sell a call for $1? And they stalled for a minute, and they went like, $1? It's like, yeah, right, exactly. And how much can you lose? You wake up one morning and they're $9 lower. You just lost $900. And you did it naked. So what if you do it 3 times as a bear spread for the same $100 and only take a risk of, say, $250 or something like that? So there's a lot of different things. You can use options at a very high risk if you want to, and the objective is not to. But I think one thing is for sure, and I've been saying this, and I've been having this conversation for a while now, and that is that people drive automobiles with a car insurance. People have health insurance. They have house insurance to protect, or apartment insurance to protect where they live, their domicile. And they have life insurance to help their families out if they pass along. So why does the 2 different government agencies allow public money to be traded? In other words, basically allowed them to take enormous risk with no insurance. I mean, it seems to be absurd to me. I don't understand. You're a pension fund, right? You're investing pension money, and you put it in a fund that is selling options naked. That shouldn't be allowed. It's crazy. It doesn't make any sense. No wonder the pensions are all underwater right now. Look in the United States, all our pension funds, they've dropped their the amount of money they're giving their retirees anywhere from 33 to 50%, if not as much as 70%. I mean, that's because they're out there doing stupid things like allowing investors to invest their money in a stupid way, not using the insurance the way it's supposed to be used. So, and the Commodities Futures Trading Commission and the Securities Exchange Commission allow that to go on. But somehow or another, you're forced to have car insurance, and they force you to have, like, if you have a mortgage, you have to have house insurance, and if you have other different types of equipment, they'll make you have other insurances. So why don't they make investment funds use option insurance? I mean, that's the laws are written identical to the insurance industry. That's why they call it premium. When you buy an option, they refer to it as a premium. So you're buying a call option, or if you're buying a put option, you pay a premium, they call it. It's just a price, just like you're paying for a stock or a futures. And it's the same thing with puts. If you buy or sell a put, same thing. They call it a premium, that you're buying the put with or taking the premium in. And same thing with the call, buying a premium or taking the premium in. So, I mean, why do they let this, this irresponsible investing going on every day? It's a real question mark there. I've been thinking about trying to straighten that out. I might get involved in the politics again and do that. I'll, grab me a couple senators and do that. Not senators, congressmen. It's better to start off from the House. So, House of Representatives in the Republic here. All right, so I hope I've answered your questions. If I missed anybody's question, fire it out. Trust me, there's no stupid question in investing and trading. There's just long answers or short answers. That's what it really comes down to. And for you, Don, with the 30, you figure it's about 22,000 in American dollars. It depends on what you're trying to do. But I would say start looking at the options universe and see how you can commingle it, and we'll gladly explain it to you every day here. We can be a little bit more deliberate in conversation and not super nebulous in any way. In other words, we can be very clear. I've done many webinars on Dukascopy talking about options, and I'm an option. That's what I am really. Is I'm an options derivative trader. I've been that since I started off on an options exchange. I've been a member of every options exchange except for San Francisco. So, it's not much of an enigma to me. Let's see. What else can we say about this? We still have some time. We have like 13, 14 minutes. Anybody else see anything they want to talk about? Don, you have a strategy? Or do you want to... Remember, I also had this conversation just recently again, and I have it a lot of times. Remember, we're not all working on trading desks, and we're not working on trading floors anymore, okay? So what happens is that those things almost basically don't exist anymore. And so what happens, they were reactive traders. They were not proactive traders. So every time you read something about somebody about how they made their money, chances are they were doing it in a reactive state. They were on a trading floor or a trading desk, or they were involved in something of that nature. The buy side guys, it's funny. I rarely see the buy side guys writing books. I can see Susquehanna, which is a sell side bunch, and they do buy side work, but they're really Cheshire cats. They're out there trying to. I'm not going to get too deep about it, but the end result is that I've seen buy side guys. They don't talk about. It's awful hard to even get buy-side people to put their pictures somewhere. Hell, I worked for a buy-side hedge fund, and they were a renowned individual, and some little Wall Street magazine wanted to put a picture of him in an article about him, and he didn't want to really do it. So he finally, after I guess about 5-6 months, he said, "Okay, we'll do something." And so, would you believe he sent the wrong picture in? He didn't send a picture of himself. He sent a picture of somebody else, some generic one or something. Like he went and got a, those picture frames that have people's pictures in it. He grabbed one of those pictures, some generic picture, and just sent it to them. And and then they wrote the article, whatever it was, and that was it. The guy is world renowned. If I gave you his name, you'd be like, "You're crazy. You're kidding me." Yeah, buy side people don't usually talk about their strategies per se. That's why I can easily say, tell me what you want to do, and I can tell you how to do it. I can give you a couple different strategies that more than likely you can investigate, and more than likely they work fairly well or really well. But buy-side people, they got a lot of ideas in their heads, and more than likely the idea is to not anybody else know what their ideas are. So I guess that's the best way to describe it. And you may be wondering, what do I mean by buy-side? What happens is that here in the States, we refer to it, now they also do it outside the United States, call it buy side. If you're a hedge fund or a fund and you're a buyer, like a mutual fund and so forth that has to invest money, so they consider you a buy side. Now, if you're out there selling out there, like you're a mutual fund and you're trying to get people to buy your product, that's really a sell side. Now, if you're a pension fund, you're a cross between both sides. There's a sell side, which is trying to bring money into the fund, and then there's a buy side that's investing the money. They have to figure out how to make it more than what they started off with. And so that's what a buy side is versus a sell side. So that's how that works there. All right. If there's no other questions, we'll just kind of ramble along again. Let's see. Where are we at here? So where we left off? We did Swissy. Let's take a look at the yen. There's the yen there. Excuse me. And then let's take a look at the yen in J4X. If I can find it. Where is it at? It's down to the lower. Right there. Trading at 106.71. Looks like they're lifting it up. I noticed that the dollar index has been moving up a little bit too. It's still in a weekly sell, but LSLS. Do you think it is possible to use AI in Forex? Sure, but I've become less of a fan of AI and more into quant. Quantitative trading and AI are not necessarily the same, and I'll explain to what that is and what language can implement those techniques in the best and more accurate way. Sure. Artificial intelligence, Janos, the head analyst for Dukascopy, has talked about this, about how to trade economic news. And he's made a webinar out of it even. And there's a video floating around here somewhere. And one of the things about that is that, it chased after the AI type of trading that goes on with fundamental analysis. So in other words, what they do is they put a program together, and I don't think it really matters that much. I guess like Python and so forth, C++ and so forth, when it comes to the code. And then what happens is that they take variables that are like let's say it's like labor numbers, and it's plugged in. If it's going to be greater than this or less than that, you can do this, buy it or sell it, that type of thing. And so AI is kind of just a machine way of following the fundamentals. Now, obviously, you could plug in some moving averages and some leading and lagging indicators, but overall, it's not exactly what I would call a consciousness. It is more of a history. It's you're going back and looking at historical events, and then figuring out what they did from that information. And so then you fast forward it, and you write programs that will execute on those ideas, or those parameters, not ideas. As I take a sip of water here. All right, now when I look at things through quantitative analysis, and so let me show you. Like here, both charts have, like right here, J4X, we're using 3 indicators here. And what I've done is these indicators have a characteristic of my quantitative algorithm, okay? And my quantitative algorithm is more like a consciousness. So what it's doing is it's taking the value of things, and it's analyzing it the same way, in a sense, and I have to say even a better way in a sense than Heisenberg's uncertainty principle or quantum mechanics. It's looking at things not as a bell curve. It's not taking things as a statistical average. It's taking things, data, and like a brain, it thinks about the event that has occurred, and it's not looking back at what has happened. It has a formula that says this will happen because of that. Okay, that's a big difference. With AI, it's basically looking at historical information, retaining it, and being able to make that snap decision very quickly. Okay, that's what AI does. And I've become less and less a fan of AI. I'm the more over the decade I've been playing, especially after my Princeton adventure, I really have become totally convinced that I can identify the difference between a consciousness and an AI historical retrieving concept or system. So I think that, not to beat up on AI, but I think that needs to be differentiated or described, or so forth, because again, that goes under the category of the way hedges are with pairs and offsets. In other words, do VWAPs and so forth. In other words, you're buying BMW and you're selling Mercedes, right? And you're trying to do it as a VWAP, equal amount of money on each one of them, hoping that they stay in line. But that doesn't guarantee you that they're going to stay in line. But if you're trading BMW and hedging it with options, it doesn't really matter how much they destroy the stock or take it to the moon. If you're using options with a plus gamma nature or an insurance nature, then you're pretty much covered, and you don't have to worry about anything at night when you sleep, or your position, or you're not going to lose your equity. But can you get clocked if you're shorting Mercedes and buying BMW, and BMW or Mercedes does something incredibly stupid, like the way Volkswagen or Porsche did, and next thing you know, the stock has no relationship to the other automobile companies? In other words, that's the problem with an AI and pairs trading. It doesn't always work that way. You're better off. I know people are selling, buying euros and euros against dollars, and then selling Swiss francs against dollars, and doing stuff like that, or British pounds and dollars, or Aussies, and maybe even throwing gold in there, and doing, trying to do these sophisticated pairs trades. But that is, again, you better be in and out of them on a short period of time. I would never carry any of those beasts overnight. Never have any of those positions on where they close and have the potential to reopen again. Never. Because you don't know when they close them just for an hour or a half hour. You have no idea. Your stops mean nothing now. If it happens when the news comes out on whatever stupidity a company's done, or what fantastic thing it's done, it will, your stop has no relationship. And the next thing you know, you're getting hung out to dry. Okay? So and I think we're going to label this webinar today, Hedges. What are they? I laugh to myself sometimes, some of the ideas I come up with. But yeah, I mean, that's what we're really talking about here, is understanding a hedge. What is it? And hedges, what are they, and how do they work? I mean, really. So that is pretty much been the conversation today, which is really interesting. And I thought there were some really good questions too, because trying to understand how much risk you take, how much money do you put out, how big can you get, how long do you last in something, things like that. They're important questions. You should know those. You want to know those things before you commit capital to anything. You want to know, you really do. Hedge. What are they? Hedges, I guess. Hedges. So I thought the questions today were really great, all of them. They all made sense. They're important questions, and you want them answered before you commit your capital. And who's going to answer them? You're going to answer them in the end. You're the one running your money. So, you can ask me all the questions you want about it. I'll try to give you as much information or where to go to look. And I think we've only just scratched the surface of those questions. There's a lot more answers I can give you. All right. This has been Doc from North America. We will catch you on the flip side tomorrow. I guess tomorrow is Thursday, so today is Happy to Hump Day. So happy trails to you until we meet again. Happy trails to you.